Welcome back to Global Fintech Fest 2023, brought to you by Payments Council of India, National Payments Council of India, and Fintech Convergence Council. Well, our upcoming session will investigate the changing function of blockchain in areas such as payments, digital assets, smart contracts, and decentralized finance. This exploration aims to uncover how this revolutionary technology is positioned to simplify procedures, bolster security, and promote greater financial inclusivity. This blockchain in banking and financial services, and the esteemed speakers for this session are right here amongst us. May we please welcome Sarang, Bhoyar, Head of Blockchain, National Payments Corporation of India, and Professor Himanshu Tyagi, IISc, Bangalore. Please put your hands together to welcome our esteemed speakers up front. Thank you.
All, can you hear me? Yeah, okay. So, you had a great lunch? Yeah, and the topic is very heavy, and I can expect 50% sleepage. Anyway, I'll try to make it short and give it most of the things to Professor Tyagi so that you don't sleep, okay? How many of you think that blockchain is going to change the world? Please raise your hands. Sorry to disappoint you, but we would talk some things here which would, make it a little bit more clear what exactly this thing is. So before we go into this, okay, so all this started in 2008. I would just let some more people come in so that I feel good. Okay. So all this started in 2008 when the Bitcoin white paper was released. And along with that, the Bitcoin core software was released. That was, people call it, that was a great invention. It must be because it landed me a very good job. But exactly what was that? We'll come to it. So that particular thing that was created was to solve a very specific problem. I'll come to that problem. So the problem was, how do you achieve a digital cash in a decentralized environment where there is no central authority to manage the transactions and you still address the problem of double spend? A lot of, a very long sentence, but that was the very specific problem that Bitcoin core was trying to solve. And it did very well, except for some factors that we'll not get into. It was a great invention which utilized some of the existing things like cryptography, decentralization, disintermediation, clubbed with a very clever incentive engineering, how you mine and how you get the rewards out of that. Putting this together, it worked extremely well for that particular problem statement. Then we have an army of blockchain evangelists that came in, and they started putting the blockchain as a solution to all the problems in the world, including the world hunger. Well, blockchain is not that, okay? Blockchain can solve only certain problems with certain designs, principles that you apply to that particular business case, okay? Now, I will not bore you further. So what we are going to do, before we go into the deeper of this very heavy topic, I would let the real expert, not the evangelist, the real expert of blockchain, Professor Tyagi from IISc, to take us through some of the basic features of blockchain, and then we would get into certain more deeper things like challenges that we are facing in adoptions, solutions that are being worked out, great use cases, and then we will close. Okay? So over to Professor Tyagi.
Hi, thank you very much for inviting me for this session. And I think before I begin, I would just reorient the topic in the sense that the introduction probably put a broader picture, but what mostly we'll talk about is the technology behind blockchains and what are the challenges which are stopping that technology from being adopted. So I'm a researcher in this topic, and I also happen to have a startup which is in the public blockchain domain, where a lot of exciting technology innovations happen. At the same time, this session and this whole Mela is about enterprise blockchains and banking and the regulatory framework that coexists with blockchain. And one of the goal of this session is to bring out some of those advances happening in the public blockchain domain, the open blockchain domain, and seeing how they can help us solve problems in this enterprise blockchain domain. Oh, this is an extremely popular session. So that's good to see. So let me start with this. This is a bit of a difficult talk to make because I had no clue about we had no clue about the diversity of the audience. I'm pretty sure some of you are big experts in blockchain and are actually developing blockchain systems right now. So please, you can sleep off. I hope you had heavy lunch. And I'm sure that others are maybe more from, I have just interacted with blockchain from media perspective, NFTs and gaming and that. So this session is sort of in the middle. I will try to come to the tech behind blockchain. Please feel free to stop us and ask questions because this is technically heavy. All right, so what is a blockchain? To begin with, let's make sure that everyone in this room agree with this definition of blockchain that we assume in this session. So blockchain is nothing but a decentralized and trust-free computer. Just like any computer sitting here, more like a server sitting on the cloud. That's what a blockchain is. So it must be decentralized. It should not be at one place, just like Google, Azure, or AWS cloud. And it should be trust-free. Okay, that's all. So it's a computer. Just like any computer, you can run programs on it. Just like a server, you can run programs on it. And then you can interact with those programs by building applications. That's what a blockchain is, nothing else. Slightly different definition from what he gave, because it turns out that the first program written on that computer with a very limited instruction set was just transactions of money called Bitcoin. But you should think of it as a general computer where bigger programs can be written on it. Okay, so that's a very weird and broad definition. Looks like everything is a blockchain. Looks like everything you interact with every day is a blockchain because everything is running on cloud and all the services are using distributed compute and storage. If you have used GitHub, which is a tool one uses for version control of code, or even Google Doc, you may think that looks like a ledger. We are agreeing on that. So is everything a blockchain then? Well, one distinction I would like to make is that the second word there, trust-free, is essential for, at least in this session, and for me personally, to call it a blockchain. If everything is centralized and trusted, then it is just a web service with lots of cryptographic primitives in it. Blockchain, for me, means trust-free. To some extent, different parts of trust-free. So what do I mean by trust-free? I'll put two requirements. First is this trust requirement. If you look at traditional web services, they are permission. You have your AAA, you have your authentication through which you go to your account, and then when you authenticate, you're authorized to access certain services. And that's all permission. Blockchains, in contrast, should have some notion of permissionlessness and openness, some notion of it. Okay? In public blockchain ecosystem like Ethereum, it is completely open. Anyone can make an account and go. Maybe in enterprise blockchain, it will be somewhere in the middle where some notion of openness and permissionlessness is there. So that is a requirement. Second, which probably, this first one maybe you have seen, most of you would have seen. Second, maybe fewer would have seen, is any decentralized system needs to have some fault tolerance. So if you look at web services, what kind of fault tolerance do they have? Well, if one of the server goes down, or if one of the memory unit crashes, the service keeps on running. This is called crash fault tolerance. This is just how devices are when you have such large scale. Devices start crashing. So you may have never seen your computer crash for years, but that's because you're not using it enough. If you use it enough, it will crash. It is bound to crash. Those probabilistically low errors will surface. And that's what happens when you're at a scale of an NPCI or something. That's why you need to have a decentralized storage because things crash. So any decentralized service will have this crash fault tolerance. But what blockchains require is what is called Byzantine fault tolerance. And why it's called Byzantine is a weird academic story, not interesting at all. The people who wrote the first paper on it were inspired by Byzantine Empire and they wrote something there. So what is this Byzantine fault tolerance? Because it's an open and permissionless system, we think that the parties in the system are rational agents who want to maximize their personal profit, personal, I mean, it can be countries who want to maximize their profit, right? So they are not just, the systems won't just crash, systems would be adversarially modified for the benefit of those players. Okay, this is very different from crash tolerance, the kind of fault tolerance we require. So one can think of it like an adversary who would try to maximize their own profit, and yet whatever is the system designed for should work out. So this is one basic difference between web services and blockchain, that one is crash fault tolerant, but blockchains are Byzantine fault tolerant, BFT. Okay, so these two differences. So far, so good. Yeah. Well, okay, sure. So yeah, so very simple. Crash fault tolerance is when devices crash. Devices are not trying to be adversarial. They just crash randomly. So if you have 100 devices, you know that 30 of them are about to crash. So you will instead have 300 devices. Okay, so that even though they crash, you will still have 100 running, 200 devices. So that even though some of them crash, still you have enough running devices. This is just basic fault tolerance. Byzantine fault tolerance is not just a random crash. You modify the code to maximize your profit adversarially. The program would be changed by those devices to make the thing work for them better. Just a very simple example, if you make a payment system between two banks, and as you know, in payment systems, prioritization of transactions is very important. If you are able to prioritize your transaction above someone else, you can make a lot of money out of it. And so this bank, when they are running their transaction, they will prioritize their transaction. The other one would like to prioritize their transaction. And one has to make sure that still the system doesn't crash. So Byzantine fault tolerance is very different from crash fault tolerance. Agents will try to modify the system to their own advantage. Okay? So that's the fundamental difference. That's why the algorithms look much more different from what you see in cloud. Okay, good. So but why do we need this? Why do we need a trust-free computer which is decentralized? Aren't web services enough? Well, it turns out often parties with competing interests or asymmetric power transact. So when you are transacting with a Google, do you think there's symmetry of power? So when you are using Google for your email service, do you think there's symmetry of power? Very recently, what happened with Twitter is very interesting. We may or may not agree with it, but there was no symmetry of power in that. Twitter is deciding what it wants to do and how it wants to prioritize, what rules it wants to change, right? So it's a centralized system. It is very robust. Centralization comes with power of a monopoly and that robustness of a system. Yet, there is an asymmetry of power and one party has no say. Can we still guarantee equal rights for both parties? Closer to ground, there can be examples of the kind that I just mentioned, where there are multiple banks who want to participate in a consortium for payment system, and they don't trust each other for prioritizing the right transactions, and yet they want to coexist. So both situations come up when mutually untrusting parties want to run a program together, want to build a service together. It's so big that they don't want to trust another third party to run it for them, right? Or when you have this asymmetry of power and still you want to transact as an equal. So in both these situations, we need a trust-free web server or a computer. Okay, but that's what the regulators are for. So why do we need this? Can't the regulators take care of all this? Indeed, that's how the world is running right now, right? The regulators take care of many of these things for us. But there are issues with that. There are sort of bottlenecks that come out when regulator is taking care of all these things. First is that there can be regulatory inefficiency. How many of you have done a rental agreement for that 11-month agreement that we do, which is a meaningless thing? That's because it's so much, right? So many contracts have to be written. If we rely on regulator for everything, these inefficiencies will creep in all the time. Regulators can even fail because of the vastness of the ecosystem. When we say that these welfare schemes are not reaching to the last mile, it's a bit of an odd thing because government is giving money and it's implemented by government offices and yet the money is not reaching the last mile. So the regulator is failing there in some sense, right? We should ensure that it reaches the right person at the last mile. So this can also happen. And third can be that it's not nothing to do with the regulator at all. It is something else. For instance, Swiggy maintains some internal reputation for its gig workers when they are doing deliveries. And they use it for bonus. But it's actually this gig worker's performance. And this guy should own it and should be able to take it to Zomato when they go to Zomato. But right now, this cannot be ensured because completely reliant on Swiggy. So can we build services and computers which get around this requirement of a trusted third party, like a regulator, who can enforce rules? Okay? That's why we need this ecosystem, and that's why we need to go beyond regulators. Okay, so actually, I'm a career researcher. First time I saw, I think I read about blockchain in 2009 or 10, somewhere around the time when I was doing a PhD. And, it didn't struck me what it is, what is so spectacular about it. Odd paper written by an author who was not known by anyone, right? Satoshi Nakamoto, people think must be a young guy because of the way he was writing the paper and the way he was taking a risk. Maybe a PhD student from some other place. It didn't struck me what this is about, but later when I read more into it, by the time when Ethereum came up, it just blew my mind. How can someone build something like this? It's completely magical. And often with crypto, this magic is there. So all crypto solutions, one thing about cryptography is it's just pure magic. It's a lot of algebra, and this thing should not happen in regular maths, but it happens. So how have they been able to build this? First thing is commitment and signatures. So you are working with a server, and you are a client working with a server. You don't want to trust the server. The server should commit to whatever it's holding to. And you should be able to sign and say, I am the right guy to transact with this. So commitment and signature is one part of it. Second part of it is, this is the most critical part, is consensus. All these different devices will just go in their own order. They will say, this is the first instruction, this is the next instruction, this is the next instruction. That's what computers do. Computers just arrange your program's instruction in an order and execute them. But now, since there are multiple devices, they may all have different sequence of instructions, and they would try to modify it to their own advantage. So we need an algorithm which says we'll follow a rule, just like we do elections. Everyone wants a different leader, but we follow a rule so that a single leader emerges at the end. Similarly, we will follow a rule. Some of you may be happy, some of you may not be happy about it, but it's an algorithmic rule which no one can deviate from. And even the adversarial agents, as long as there are some limitation to how many adversaries are there in the system, will not be able to make you deviate from it. That's what a Byzantine fault-tolerant consensus is about. And finally, as we heard earlier, why are they doing all this? Why are they following this thing? So one of the things is, there is an incentive ecosystem to make sure that everyone gets rewarded appropriately. At least the honest agents get rewarded appropriately for doing their job right, and the dishonest agents gets penalized for not doing their job, for trying to disrupt the system. And there are some terms I've written here, but maybe I won't go deeper into it. So this is the end of the first part. What I gave was some basic abstraction of the notion of blockchain, but maybe I would request you to say something a little bit about in what form you have been interacting with, or maybe in the next part we can come to.
But we need to move faster now.
It's okay, we'll stop wherever we have reached. I mean, it's you're gaining something, hopefully. Okay, so we need to go faster. Okay, so great, very fascinating technology, very new kind of web services, trust-free, decentralized. Why is it not everywhere? Why don't we have every bank account operating this way? Why are not banks using this for transaction? Actually, we're coming closer to it in some sense, but why is this not everywhere? So there are 3 challenges I'll highlight, and then we will say what's going on there. So first challenge, the biggest challenge of blockchains is scaling problem. Okay, it's a trivialization of the challenge. I think these numbers, it's not a apples to apples comparison, but still this is for dramatic effect, right? So so we want an application like Visa, which can handle 20,000 or 24,000 transactions per second. And if you try to use Bitcoin for that, it can handle 5 transactions per second. Okay, so no way to scale this there. Oh, you can go to a more programmable ecosystem and sort of a slightly better ecosystem like Ethereum, and you have a four-factor improvement. Still short of this. So instead of this 2023 computer that we need, we have a 1980 computer. And the question is, how can we use a trust-free, decentralized 1980 computer to make a 2023 computer? Okay, so that's one challenge. The grand challenge is scaling. Every public blockchain project, the excitement in technology is in this. One of the excitement, major area is the scaling part. With roll-ups and all those things that you hear is all about scaling. Second challenge, very significant in the banking and finance sector, is the security challenge. There are many aspects of security, but most prominently, if you want to have contracts which are pieces of software which are locking in billions of dollars, then the software better not have any vulnerabilities. The code should be impeccable. Unfortunately, code verification and code testing is still an art done by very few experts for these kind of things, so that security vetting slows down the whole process. So if you start let's say you raise fund for a blockchain company and you are going to launch a smart contract and you raise $20 million for it, not a big number in that ecosystem. First thing you'll have to do is that before investment is you have to get your smart contract vetted by one of the formal verification experts who will probably charge $500,000 to $1 million. Okay, so this is because this is a very difficult task to go over each line and see what vulnerabilities are there. And now, if you want to turbocharge the whole ecosystem with with code like this, how will the security challenge be handled? So this is the major one. Third one, okay, this is, I think we should say that there are a lot of very easy use cases of blockchain. Enterprise blockchain, everything permission, nothing fancy required. Just conviction for implementing is required. I feel that what's stopping that is somewhat lack of regulatory clarity. What is allowed, what's not allowed, what's the legal standing. Hopefully that will emerge soon. Unless things like FTX keep on happening and distract everyone. But hopefully that will emerge soon. Some use cases can be picked up quickly. So these are the three challenges: scaling, security, and this regulatory uncertainty. I think these three challenges are the ones which are stalling the system. But at this point, it's a good point to take a pause and go to Sarang and ask from his perspective, what has he been seeing in terms of challenges in picking up blockchains in enterprise use cases?
So it's been 15 years, right? We are hearing blockchains are coming, blockchains are coming, blockchains are coming. So it has become like, mere Karan Arjun aayenge, but kab aayenge? So what is the problem? Why are they not coming, right? So while the technical challenges are outlined by the by Professor, see, practical challenges are this. There are many blockchain frameworks that are available in the market today. So it started with Bitcoin Core. There is Ethereum. There are various flavors of Ethereum. There is Archicorda. There is Hyperledger and various flavors of Hyperledger. There's multi-chain and whatnot. There are 100 more, and I don't even know the names, right? So the question is, which one do I select? And specifically for the enterprise scale or enterprise grade application. So you need a very deep knowledge of each and all these before you select, because once you select, you don't want to go back. It's not like, Java that is Pro 1, you write on it and you can sit on it for 20 years. So it is an evolving technology. So making a choice of a blockchain framework itself is a very difficult question at the beginning. Okay. Then the selection of the right use cases. As I said, blockchain is not for everything. Aquaregia, Aquaregia dissolves almost all the elements on the earth. So blockchain is not the Aquaregia that is going to dissolve all your problems. It can do only few things. So you should be very clear about the use case that you are going to pick to implement the blockchain or implement using the blockchain. Third problem is the governance model. See, blockchain is a network play. So if multiple departments within your single organization are going to come together and use a system built on blockchain, it is useless. It's like you are using a baseball bat to wash the clothes. It is a very powerful tool, and it requires probably a use case which has quite a lot of organizations coming together to execute end-to-end use case and benefit from it, right? Now the problem here is all those organizations are naturally competitors to each other. And how are you going to bring them together to do the business on this software? So who's going to bring in the trust? So that brings a problem on the governance model. Okay, so how the governance is going to happen, how the people are going to come together, form the consortium, and how it is going to run. So governance model is a major challenge that we have been seeing. Then there is a dearth of real skilled talent. By real skilled, I mean real guys who can actually code the blockchain, not talk about it. So whoever wants to make their career as a blockchain developer, my request is that it is not a 6 months course that you can do and you become a blockchain developer. You need to know actually all the basics. You should know at least 2 programming languages. You should know the databases, the persistent database as well as in-memory database. You should know how the data resides, how the data works at rest and in motion, the networks, how the flows happen, and the messaging systems. After that, you can do whatever blockchain course you want and come in and you will be a very good blockchain developer. Till that time, you can write whatever on your LinkedIn page, but it's not going to work when it really comes to coding the blockchains. There are other challenges also. Regulatory challenges were there. They are getting clarified day by day because everybody, not only in India, across the world, is very clear that blockchain technology should be supported, while they have different views on what should happen to the application of it, which is crypto. Okay? So these are some of the challenges which has slowed down the adoption of blockchain as a technology, but we are very confident that these would be overcome over a period of time, and then we would be picking up the speed. And it's a time probably professor also tells us exactly what kind of work has been done and solutions have been worked out to address some of these challenges from a technological point of view.
Yeah, so as we saw, like there are different types of challenges, regulatory, also business challenges about what kind of business models to build, what use case will take off first. These are different challenges. But we thought for this session, we will focus on a very specific challenge, namely the scaling challenge, which is where a lot of innovation, technology innovation is focusing. Okay, how do we handle this scaling challenge? So as I said, blockchain is a decentralized trust-free computer which runs very slow, but even though some of the players running that computer can try to cheat, they cannot cheat. So that it's slow, but it's trust-free. So now how do we scale such a computer? So what I will do is I will quickly go over some of the ideas that are floating around, mostly in the Ethereum ecosystem, but also outside it. Lot of jargon is coming your way, but hopefully you will pick up one or two of it. Okay, so why are blockchains slow to begin with, right? They're slow because there is multiple machines running, and they need some time to share the transaction data with each other, just like any Web2 service, and then they execute it. But then they also have to reach consensus that this is the order between us. And it takes some time to do that, in terms of seconds or minutes, up to minutes it can take, which slows it down quite a bit. So that's why basic blockchain is slow. What is called L1, layer 1 blockchain is slow, because there are different machines running by different players who can be different banks in the banking consortium example. Or in public blockchain, these are different validators who validate the blockchain. The miners in the Bitcoin language who mine the coins, they're different players. And the consensus between them makes it slow. So what can we do to get around this bottleneck? There are many ideas. I'll start with this first idea. This is the idea of state channels, which was popularized by Lightning networks to make a payment solution over Bitcoin. And the basic idea is that everything need not be validated by the same blockchain. If I and you are doing transaction, we don't need to involve this blockchain every time. We can go on the side and transact as much as we want. This all happens off-chain. When we are done, we can go back and commit a state. Okay, this is the basic idea of a payment channel. These ideas are picked up in things like offline payments. I think there's another session going on that in parallel. That's called a state channel. A very simple example is that I want to pay him, but it's not single time that I'm transacting with him. I will do it multiple times. So what I will do is both he and I will commit that we will lock 100 rupees and 0 rupees on blockchain and come out of it. In the middle, we'll keep on signing that I'm giving him 10 rupees. Now the balance is 90, 10, 80, 20. And then when we are done, we can go back and commit that state to the blockchain. So blockchain doesn't get to know what happened in the middle, but it knows that finally the settlement happens there. The intermediate part can go very fast. This idea of going off-chain to scale certain transactions between fewer parties, instead of millions sitting on the blockchain, maybe tens which are off-chain, is called a state channel. This is the first idea. Already was deployed, was picking up. Lightning Network is just this. Okay. Second idea is one of those crypto magic ideas. It's called zero knowledge proofs. Okay. These are some So the reason blockchains are slow is because when you prove something that no one is cheating, you have to do a lot of algebraic operations. Algebraic operations are very expensive. Uh, Expensive in terms of compute. It takes a lot of time. So some crazy mathematicians solve problems which look unsolvable to begin with. And these are called zero knowledge proofs. These are very short proofs of statements. So when we run a program, we want to prove that this program is doing exactly what it's supposed to do. This is what I call a proof. And in fact, this can be done. There is a company called Starkware, which gives this software off the shelf. So these zero knowledge proofs are another way of scaling the blockchain. They shorten the length of the proof. So sharing them and validating them is faster. Okay. Okay, this third idea is that of an optimistic roll-up. By the way, these are the hot terms if you go to any crypto conference. Roll-ups, ZK, state channels, payment channels, but they're all scaling solutions. Okay. So this optimistic roll-up, what is this optimistic roll-up? It says, why are we validating each and every transaction that is going on? It is so wasteful because most of them would be fine. Our ideal goal is to validate only suspicious transactions, suspicious things where someone would have double spent. I have signed that I'm paying him this token, but the same token I've signed to someone else. That's a double payment. It can be easily verified. So rather than verifying each and every transaction, is there some way in which I only validate on the main chain the suspicious transactions? So suppose there is a guard, a chowkidar that you have been able to hire who can directly pinpoint these are the suspicious ones magically, then we only take that to the blockchain. So what these optimistic rollups do, for example, companies like Arbitrum and Optimism, okay, these are leading optimistic rollups. Polygon is very hybrid technology, but these two are optimistic rollup. What they do is they run transactions off-chain very fast, but the transaction data is committed to Ethereum on-chain. The idea being that anyone can verify if anything wrong is going on and raise an alarm, and then we will do this. So you have a very slow computer and you have a very fast computer. This slow computer is trusted. Everyone believes in this. Fast computer is fishy. Okay. So what we do is that whatever the fast computer is doing, periodically it puts it on the slow computer for anyone to check. And you can raise an alarm and say, okay, I want to run this part on this slow computer. Okay, that's the setup. This is called optimistic rollup. So for instance, Arbitrum, we saw Ethereum has 20 transactions per second roughly. Right? Arbitrum supports 40,000 transactions per second. Okay, so Arbitrum actually is the most cutting edge scaling product right now, run by a person named Ed Felton, who's sort of a leader in this area. But those technologies are, the great thing about this public blockchain ecosystem is because it needs to be open, the software is generally available publicly, not in the case of Arbitrum, but generally some version of it is available publicly. So one can fork from that project and start building on it and start making the code robust. So this is the third idea. So state channel, ZK, and optimistic rollups. Okay. There's an issue with this. Another part is that, okay, I said we'll post the transaction data on the main chain. Is it free to store on the main chain? Am I free to store? So turns out that's not the case. Even that cost adds up. So there's another body of work where people are trying to make sure that this part is also taken off chain. So why am I storing everything on chain? There's a cryptographic primitive called commitment, okay, which says that I can store a very small thing on the slow computer with little memory. And once I store that, no one can change this larger data which I use to generate that. So there is this kind of construction. So this data availability, what it does is, it takes this burden of storing from the main chain, again, to off chain, and only commit something very small on the main chain. Again, there are a lot of big DA projects coming up. Ethereum itself is building a DA for its internal use. See, the idea is that as we move forward, these L1s that we are all used to hearing about, Ethereum, even Bitcoin, they will just become source of trust, pure source of trust. No compute will happen on them eventually because it's so expensive. Okay? So what will happen is that you will use them to agree and just have a trust. Just like we trust a regulator, we will trust this blockchain. Whatever compute will happen off-chain, except that you have to make sure that you can't deviate from what is supposed to happen. So you have to regularly commit something there and use it as source of trust. That is the ecosystem that towards which we are evolving. This data availability takes a storage part outside that. Last technique. I ran through like 200 papers and 30 companies each of whom have raised about 100 million already. So a lot of stuff here, okay? Uh, so please slow me down if you are not following. The last idea is, it's also a very cute, simple idea, is what is called sharding. Can we all run different transactions? Can bank 1 run its own transaction for its user, bank 2 run its own transaction for its user, bank 3 run its own transaction for its user? That will be more efficient because then we are dividing the work between us. What's the issue with this? Of course, the issue is that what happens to transactions from bank 1 to bank 2? So there are many solutions for that. Can we have a chain just running this cross shard transactions called a beacon chain, which someone like NPCI can host or someone can host? Just an example. So this sharding ideas do something like this. They split the job of validating transaction between different players, and they all maintain their internal states. Only the things which are cross players go to the main chain, go to a beacon chain or a relay chain, just name for the same thing. All these ideas have seen a lot of progress in the last 5 years. In fact, during the COVID years when we were all locked in, a lot of progress happened in technology in blockchain because funding also came quite a bit to blockchain. So all these ideas can be picked up even in the enterprise solutions. So this was the last thing I wanted to cover in ideas. I went very fast through it. Happy to take any questions on that. But at this point, I will, I think, go to you and see what are the methods that you see evolving in enterprise use cases? Because most of these techniques are very prominent in the public blockchain domain. And some of it, I'm sure, are being borrowed by enterprise use cases as well, because this is the main idea space for blockchains. So I'm just curious, what do you see happening there? How are people handling the scaling challenge in enterprise blockchain?
Okay. So at NPCI, NPCI is Blockchain Center of Excellence. So we tried all the main frameworks that are already available. Anything that new comes in the market, we experiment with it. After doing quite a lot of experimentation and implementations also, we have come to the conclusion probably we'll have to build our own. Because anything that gets built in NPCI has to be built for at least 1 billion people. And that scale is unimaginable, but now with UPI, you can imagine that anyway. So any new product which we are talking about going to last for another 5 to 10 years has to meet or exceed the scale of UPI, right? So there is nothing in the market that can meet that kind of challenge. So only thing that you would do is just take something that as a base, probably an open source, or build your own and build the blockchain framework grounds up. So that is what we do at NPCI's blockchain COE. From the use case, I'll just take a couple of points and then I'll hand it over to you. So basically, there are many low-hanging fruits which I would call should be ripe to be implemented on a blockchain technology. First of it is the identity management solution. Fortunately or unfortunately, in India, that problem is solved by Aadhaar. But in the rest of the world, it's a huge problem, right? Once you have an identity on a blockchain kind of a network, there are so many other things that happen so easily. So imagine you're going to, once you are born, or your kid is born, okay? With the birth certificate, you get your ID generated on the blockchain, okay? Now anything and everything happening with that person over a period of time is always there on that chain. So when, let's say, you want to go to have your driving license, you don't need to carry any address proof certificate, any identity certificate. You just go, put your thumb probably, because it's your biometric. You can also have your iris scan, do your driving test, take your license and go. Nothing else that you should need to do with this kind of system in place. Same for the passport. Just appear there, you are alive, put your thumb or iris. Rest of all things about your parents, about your address, and everything is already there in the system. Print your passport, go home. That is a very ideal system that can happen if the potential of this technology is fully utilized. Similar thing, the direct benefit transfer from the government. It is still happening, okay? So government is giving huge subsidy on, let's say, the fertilizers. Do you or anybody knows that that is being used for the fertilizers? Very little. You cannot know exactly where it is being used. But the programmable money, if you put that use case on the blockchain, you would very precisely know whether the money is being used for the fertilizers or not, or rather you can actually stop it being used for any other purposes. Same thing for the scholarships. It would be used only for the scholarships, not for buying the Nike shoes. These kind of use cases would become very, very natural as soon as you have a basic blockchain infrastructure in place. There's a huge potential in the trade finance supply chain, right from the quotation, PO, invoices, discounting, and whole logistics part of it. Everything can go. So this is in a nutshell, blockchain can do for us. We need a very successful use case, probably which is going to come from India very soon, which shows that blockchains are secure, resilient, and also scalable. Once that is done, I think we would lead the way in the world for the implementation of various kinds of use cases in blockchain. With that, I'll hand it over.
No, I think we covered all the use cases. I think this also we are running out of time. So the upshot is the technology is actually very fascinating and quite ready. Not robust yet. One has to engineer it to be robust, but it's ready. A lot of ideas are floating around, and it's time to start implementing these use cases and unleash an innovation ecosystem, because you can do many magical things as some of those were highlighted. Yeah, with that, I think we will stop, and if there are any questions, we'll be happy to take.
I think we can have a quick 1 or 2 minutes for, yes.
Okay, so NPCI is primarily for the payments, okay? So the use cases that we would implement would be around the payments, but I already talked that we are the blockchain engineering team. So what we build is actually use case agnostic. It is a infrastructure that could be used for anything. And it is not locked to only the financial services, or just like Ethereum or anything else, which is at the L1 or L0 level. It is just a blockchain transaction that is happening from one node to another, and lots of rules that govern it. What is being transferred is irrelevant for the technology. Our approach is the same. Our approach is how do we build a very robust, resilient, and highly scalable system, which could be opened up for the fintech community of India, and they can do the rest of the innovation. We don't want to get into the implementation as such, okay? But the core engineering has to be done. It has to come from India. We have to stop being dependent on some of the things that are built outside. Don't want to name, but it is good for us that we get away from there and build something that is very Indian and could be very safely used by the fintech community of India. Soon.
All right, we can have one.
Thank you. I think really insightful sessions on the fundamentals, at least. It was great. So, sir, from a, this is more from a regulatory perspective. 2 or 3 things that immediately require the regulator's attention from the perspective of the tech side, that, these are 1 or 2 things that the regulator need to address at the very urgent level, because without which, this system may find further hindrances. For example, what happened at the crypto. I understand crypto is one of the applications of blockchain, but to implement overall, this entire ecosystem, just 2 or 3 those key ingredients which you require from a regulator's perspective.
No. but I would say one thing. I mean, the framework that NPCI is talking about, if something like this comes out, which is programmable, the only thing regulators are not happy about are the source of trust. I don't want to have Ethereum source of trust. I want to have India source of trust, the government source of trust. If someone can abstract that out and build the same programmable framework, I think it will solve most of the issues. So this is the step in that direction, because it makes sense for a regulator to not trust an Ethereum source of trust, right? Or a Bitcoin as a source of trust. We want the regulatory source of trust, yet the programmability of blockchain. And I think that can happen with initiatives that were highlighted. That should be, I hope that's the hallmark of any India blockchain project.
And just to add to that, we are very blessed to have a regulator who's very tech savvy. And I'm not saying this because I'm in NPCI, but we do have regulators and decision makers which are very tech savvy, ready to explore a lot of new things, taking calculated risk, not unnecessary risk, and taking things forward the way it hasn't been done in the world yet. That's why we have seen whatever has happened around us till now, and probably in the future we'll see something that we haven't even imagined yet. Right?
All right, we are running short of time, so I request the other questions can happen one-on-one. But to this captivating session that we just witnessed, I think it needs a round of applause for our esteemed speaker, and our technology partner, Prof. Would like to thank them. Have a moment.